The Ethereum charts are showing a lot of bullish signs right now. We could be moving back up to $2,000 sooner than you think. I also have some big news to share with you about layer 2 scaling, Jack Dorsey, the CEO of Twitter, using Ethereum, and the EIP 1559 upgrade. So lots to talk about today, so make sure to watch the whole video for all of the latest on Ethereum. My name's Lark, and every day I make videos to help you make money investing. So if that is what you want to do, subscribe to the channel, hit the thumbs up button, and click on the bell to make sure you catch all of my videos. By the way, if you want to start earning a safe and simple passive income with your cryptocurrencies, then you need to get yourself a BlockFi interest account. So with BlockFi, you can actually start earning 5.25% on your Ethereum, 5.5% on your Chainlink, 6% on Bitcoin, 6.5% on Litecoin, and 8.6% on USDC dollar coins. All you need to do, deposit your crypto, and then BlockFi does the rest. You get a payout every single month. And as a special bonus, if you sign up using the link down below in the description, then you will get up to a $250 Bitcoin bonus, which is awesome. Who doesn't love free Bitcoin? So check that out if you want to start earning a passive income on your crypto. Now let's get into the charts. Ethereum is up nicely today, still riding on the momentum from that massive retest that we had a few days ago, flipping the 2017 all-time high resistance into support, a technically very strong and bullish move, giving Ethereum the perfect launch pad to start moving higher. Ethereum is also breaking out from the diagonal line of resistance, which is also likely representing an end to the downtrend for Ethereum, making a further price breakout more likely. What is even more bullish is that Ethereum is right now breaking out from an inverse head and shoulders pattern. Now, this is a bullish chart pattern that could see Ethereum blasting much higher in the coming days. The targets for Ethereum for this breakout is to head back up to retest the previous highs around $2,000. That is the breakout target for this inverse head and shoulders pattern. We can expect $2,000 to be an area of resistance for the price, as it is a previous high and of course a big psychological number barrier. The one thing to keep in mind with this current breakout is that the volume, not super awesome. I would have liked to have seen some stronger volume backing up this breakout. It's not terrible, but it would have been nice to see more buyers coming in here, pushing the markets up, meaning that this breakout simply is not as strong as it could be. So let's watch now and see if Ethereum can close above resistance at $1,715. I think that would give us a lot of extra fuel in the tank for the bull case of this breakout, sending us back up to $2,000. But overall, the charts on Ethereum looking very bullish right now, with multiple positive catalysts working in its favor. So what are those catalysts? Well, there's been a lot of stuff happening for Ethereum recently. So let's talk about the bullish news for Ethereum. SushiSwap has just integrated Polygon, the artist previously known as Matic. This is a big deal because SushiSwap is one of the biggest decentralized exchanges in the cryptocurrency markets, and it will now be compatible with Matic's Layer 2 Ethereum solution, meaning that SushiSwap will be porting over its massive liquidity into the Polygon network, essentially bringing SushiSwap to Layer 2 Ethereum. While Polygon is not the only recent SushiSwap integration, it is certainly a big one in terms of providing liquidity into Ethereum's Layer 2 infrastructure. In other big Ethereum Layer 2 scaling solution news, there is a lot of whispers floating around Twitter right now that Uniswap v3 is going to be coming out very, very soon. One of the biggest things exciting investors about Uniswap v3 is, of course, Layer 2 scaling solutions. This will be a game changer for Uniswap. You're also going to start getting dividends paid out if you're a Uni token holder. That's part of the V3 upgrade, but The scaling is so critical. It's going to reduce the current gas fees paid by people trading on the exchange from like $50 a trade to like fractions of a penny. This will be massive for the entire Ethereum space. Two of the biggest decentralized exchanges and the biggest Ethereum gas guzzlers are getting on the layer 2 bandwagon, and right at the time that we need them to. Next in Ethereum news, it seems that Twitter CEO Jack Dorsey is selling a tokenized version of the first tweet ever on Twitter. Apparently there is now a bidding war going on with Justin Sun, the CEO of Tron, and the CEO of a Tron affiliated company fighting to get that particular NFT, with the bids now at $2.5 million. I don't really care who wins about this whole bidding war thing. What I find most interesting here is that long-time hardcore Bitcoin maximalist Jack Dorsey, the CEO of Twitter, one of the biggest social media platforms in the world, is selling an NFT. And it's not being hosted on Bitcoin. No. This NFT auction is happening on an application on Polygon, an Ethereum Layer 2 scaling solution. Very, very interesting. Kind of a big deal when you really think about it. So very excited to see that happening. Maybe Jack will finally start getting into Ethereum. The final story for today is about EIP 1559. A recent meeting by developers has cemented the proposal into the London hard fork in July. This upgrade will introduce a burning function for some of the fees paid on the network. Now, unsurprisingly, a majority of miners are against the proposal since it's going to hurt their bottom line. Miners are going to lose money because of this. This upgrade will help the Ethereum network, and it's supported by the vast majority of users and developers. But a lot of money is on the line here because $650 million in fees were paid by Ethereum network users in February alone. EIP 1559 could cut that in half. Miners are making a killing right now. They don't want to see their revenue from the fees cut in half. They still get their block rewards, of course, but fees are a big part of the revenue right now. So miners, after EIP 1559, would only earn $650 million in Ethereum block rewards and then $325 million in Ethereum fees. That's about a 25% reduction in revenue from July onwards for miners. Currently, 60% of the miners are against the EIP 1559 upgrade. Surprisingly, the much maligned market seller F2 Pool actually supports this upgrade. Strange bedfellows. The rebel miners now have 4 months to either get on board or to go to war against the Ethereum developers, and Ethereum users, and Ethereum applications, and Ethereum community. If they do, no one wins. Everyone loses, so hopefully cooler heads will prevail. I think that with the margin being so thin of, for and against with the miners, we could easily see one or two of the smaller pools actually jumping ship and supporting the upgrade as we get closer to the actual time of deployment. Right now, it's kind of, we're months out, so it's easy to say, hey, we're not going to support that, and then when push comes to shove, they'll probably support it. But get your popcorn ready, because this could get quite interesting. Your question for today: have you used any Ethereum Layer 2 scaling solutions like Polygon or XDAI or Loopring yet? And if so, what was your experience like? Let us all know down below in the comments section. Thanks so much for watching today's video, and peace out till next time.